Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Mark Chaikin. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Hi, this is Daniela Cambone. Welcome back to Stansberry Research. Happy Friday. We are talking the retail wreck today with Todd, Bubba Horwitz. He's back of BubbaTrading.com. Todd, Bubba, aka Bubba, always good to see you. Welcome back.
Danny, it's always great to be with you. And under these circumstances, it fits into what we've talked about for a long time.
I don't know why we're smiling. It's a retail wreckage, Todd. Retail wreckage. So, we're going to talk about that. I want to get your thoughts on that. I want to get your latest thoughts on the Fed speak. We're going to talk inflation, gold, so all that good stuff. So you want to stick around, folks. Tell me, how are you feeling?
I feel great. I feel great. I'm very unhappy with the world and what's going on in it, but I'm very happy to be healthy and alive.
Absolutely. All right. Well, let's start with analysts that have pointed to the ongoing retail wreck. They're saying it reflects a shift in consumers' demand for services rather than goods, and some have suggested stocks may be getting overly punished here. Do you agree? Are stocks getting overly punished?
I do not agree, Danny. I think that you're seeing a wreckage because you have a broken supply chain, because you have inflation running through the roof. You know, if you take a look at a Walmart and a Target that got clobbered last week, down almost 30% in one day, those are like utilities. They don't make those kind of moves. And when you can't get enough supply to fill your store, it's hard to make your numbers. And this is the ongoing problem that we continue to see because of the high price of oil, because of the BS out of China and Shanghai and their ridiculous shutdown. You know, all of these things weigh into the supply chain, which is broken. And of course, our administration wants to do nothing about it. They could solve these problems with the stroke of a pen by allowing fracking and shale producing. We'd be back in business. Our inflation would drop. We'd be back to paying $2.50 a gallon for gas instead of $6.
And we're going to go through all these points. You've basically just laid out the landscape for our interview here. So, okay, let's start with the Fed. Okay, they've come out. They said, look, we're committed to a near-term rate and quantitative tightening path. We get it. With a goal to soften demand and moderate inflation without inducing a recession. First, will they be successful? What's your take here?
The Fed will never be successful because they're ignorant, okay? They may be brilliant people that go to school, but they refuse to let a free market system work. They continue to try to manipulate the currencies. They continue to try to, fraudulently tax us without, taxation without representation. This is a brutal system that has no clue of what to do next. So they should have been raising rates for the last 10 years. We are so far behind that even if we got rates to 5%, we'd still be operating at a nominal negative rate. So they are totally clueless and will not be able to stop the recession that we are already in. There is not a chance that we're not already in a recession, but of course we know that economists don't identify things until it's way too late.
Right, and you have said that. You have said, look, we're already in a recession. That was our headline from our last interview. When are they going to come out and say and officialize this, that the recession has already started?
Probably not for a couple of years from now, because that's how they operate. Again, their job is to duck and cover and kind of try to hide what the real problems are. And the real problems is we're so debt ridden, and so many of these banks are so over leveraged that when you start seeing defaults, you're going to see the system once again collapse. And I don't know how much tools or how much power the Fed has left to save these or bail these guys out. Of course, they should have never bailed them out in the first place, which is the problem we should always remember.
Okay, let's talk gas prices now because President Biden appeared at a press conference earlier this week following a visit to South Korea and Japan with members of the Quad. But during the conference, he seemed to praise the skyrocketing gas prices. And I just want to share his quote here. He says, "Here's the situation. And when it comes to the gas prices, we're going through an incredible transition that is taking place that, God willing, when it's over, will be stronger and the world will be stronger and less reliant on fossil fuels when this is over." Thoughts on his comments here? I mean, he's praising the higher gas prices.
Can you say I don't have any idea what I'm talking about? When somebody makes a comment like that, you realize we could not be green today if we could have a magic wand. Our power grid would not support it. And you already are talking about rolling blackouts throughout the summer. Okay, so how are we going to be praising getting ripped off and trying to turn this nation into globalization and socialism instead of capitalism? You're destroying every middle American person in this country that is going to have trouble feeding their families with the high cost of gas. Not to mention we got a shortage of food coming on top of everything else because of what this administration is doing.
Yeah, and even the New York Times brought up, Biden's curious talking points, what they call it, when it comes to inflation relief. His talking point on how lowering deficits offers inflation relief. They said the administration says federal spending trends are helping rein in price increases, but the economic calculus may be more complicated than that. He said that inflation is his top domestic focus right now. But thoughts on how they're going about this?
Look, Danny, they're going about it with the idea of creating globalization, as I said before. They're going at it with the destruction of small business, which is not supposed to be the method or the message of this party. We're seeing a total destruction of what all of us grew up and remember as a great American economy. You cannot allow the things that are happening to happen, because what you're really doing is you're systematically turning the power over to all of our enemies that would like to take us out in the first place. You've made Saudi Arabia much stronger. Aramco is the biggest corporation in the world right now. You're making China stronger. You're making Russia, they can talk about their sanctions all they want. Russia's making a fortune. Just take a look at the ruble throughout all this. Okay. So they're strengthening the rest of the world while they're weakening a nation because they are totally clueless as to what has to be done. And you cannot continue, you can't borrow your way out of debt. All the Fed or the government does is create more debt. They create no products, they create no income, they create debt, which is a terrible way to live.
But on the flip side, the US dollar keeps getting stronger and stronger, basically creating an environment where there is no other alternative. How does that help the situation? Does that help even out things here?
No. Let's face it, okay? The fiat currency system is about the most fraudulent system that there is. This is the central banks around the globe that are basically not stealing, because that's not the right word, but using money and devaluing currency. It's really a race to the bottom when we look at this overall bigger picture. It is not a benefit that the dollar is stronger right now. It is just worth a lot less. If you go back 10 years, how much did your dollar buy when it was less than it is now versus what you're buying? Again, this is all inflation, taxation without representation. It is total crap at what they're doing, and the destruction of this dollar, which goes back to the origination of the Federal Reserve, not following the mandates in which they were put under to begin with, but it was sold as a bill of goods to begin with by the ridiculous criminals that started it, Rothschild, Morgan, Rockefellers, and the rest.
So do you agree that right now, and I had E.B. Tucker on saying this, that inflation is not really their main concern, the Fed, but it's keeping the U.S. dollar propped at all costs right now?
I'd say that their idea is in joint venture with every central bank, destroying fiat currency system to make sure they can get to globalization and get to a single, like a digital dollar that will be universal throughout the globe.
Okay, so you think this path just leads back to the coming digital dollar?
I do.
Okay.
I think it's sad, but yes.
Okay, let's talk one more point about inflation, because there's been a lot of talk now, number crunching. surrounding the American Rescue Plan, which we know was the 1.9 trillion stimulus bill that the Democrats passed in March of 2021. How much now we're now calculating the numbers of how much that plan contributed to the inflationary mess we're in. Some are saying it contributed 1 to 2% to the current inflation. How much do you think it has had an impact?
Well, I think it was a ridiculous package to begin with. I don't think it did anything, and I think it is probably even at a higher percentage because what other cost did we have? The hidden costs that we don't know about yet, which created these high costs. Again, they've done they've done as much as they can do to damage this country at one time, because at the end of the day, okay, it comes back down to real hard costs and what we need to live. And what we need to live right now is to be drilling oil and producing natural gas because the entire world needs it, and all of Europe is dependent on Russia for their natural gas, and that's going to be a much bigger problem as we go down the road.
Okay, final thoughts, because a lot of folks tune in to hear Bubba's take on gold, silver, and Bitcoin. So let's start with gold and silver. You were hoping for a breakout. Now you're not so convinced. But I've been saying in my other interviews, gold is not looking so bad when you compare it to the S&P, when you compare it to Bitcoin. Still on track to be one of the best performing assets of 2022. How does Bubba see it?
Well, listen, you know that long term, I love gold and silver, and I buy them physicals, okay? But as a trader, from a short term perspective, they're in a little bit of trouble here. Now, I could be wrong, and they could reverse and go higher. But until we can close above $22 in silver and $18.60 in gold, I'm going to be short, and I am not going to change my mind. Again, basically, if you look at my personal position, again, I always give full disclosure. I'm net flat right now because I'm short the board and I'm long physical. But so I'll either be double long or flat. And right now, I don't see a reason to be double long. I think you're going to see much more pressure here. But eventually, they will break out. Now, is it this year? The commodity space in general, which gold is a hard asset commodity, they're going to break out big, especially as these equities really start to collapse. I mean, I think we're only in the infancy of what's going to happen to equities. So I think that the commodity markets, and especially gold and silver, will break out big to the upside, but I think it's too early to make that judgment or buy them now because the price action is certainly negative for the moment.
So more pain ahead for equities.
More pain, as I said last time I was with you, I believe, 40 to 60%, and I'm ready to revise that to 50 to 70%.
Yeah.
Okay.
Well, do you think, just a final point on equities, do you think that it's also, proving that a lot of companies that IPO'd, should have never IPO'd, wasn't meant for the stock market? Like Peloton, for example?
I think Peloton was worthless to begin with, although it did spike much higher. I think what we're looking at is we're taking our eye off the ball, Danny. I think the markets were up, not because we were strong, not because we were in great shape, because the Fed kept adding to the money supply. And money had to go somewhere, and because interest rates were basically zero at the time, there was only one place to go. So they were giving you no alternative, as they call it, forcing the equity market up higher and spoon feeding it by creating more money, which at the end of the day is really less, because what is it really worth in real dollars today versus 20 years ago? Yes, it's much higher, but is it worth any more in real dollars? And the answer is no. And that's where the issues come into play.
Okay, a quick thought, final thought, Bitcoin. What are you doing with it here? I know you like it.
Well, I'm short it on the board. Like, again, I tell you always where I stand trading-wise, I'm short. I do own it in my long-term account, and I will continue to own it. Look, it looks like it's in a lot of trouble, and certainly it could fall lower, and I'm prepared for it. Remember, if you're going to invest in Bitcoin through a wallet or whatever, you have to be willing that it can go to zero, because there is the possibility. However, it is the currency of the youth for sure, and the libertarian. And if we continue to see the Fed fumble the ball, you might see some more money flow in, and we're starting to see some more action from some of the brokers that are getting involved in it now and making it available through their brokerage firms. So it looks good, but right now the pattern, I am short. It looks pretty nasty at the moment, but certainly I won't be surprised if next year it's 100,000.
There you go, folks. Keeping it real. Todd Bubba Horwitz, always good speaking with you. Thank you so much.
Thanks, Danny. Always great to be with you, and have a great Memorial Day weekend.
Thank you. You too. And thank you all for watching. We'll have much more for you coming your way on Stansberry Research. But yes, indeed, enjoy your Memorial Day long weekend. We will be back next Wednesday. And in the meantime, don't forget to sign up, DanielaCambone.com, to stay on top of all the latest interviews coming your way. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.